Well, as we wrap up this shortened holiday trading week, we do want to talk more about the markets and the path forward for stocks. And so joining us now is Larry Tentarelli, Chief Technical Strategist for Blue Chip Daily Trend Report. Larry, it's great to have you on the show. And what are the charts showing you about the direction for stocks?
So the markets right now, technically they're set up very well. We recently just had weekly breakouts in the S&P and the NASDAQ 100. So we've got some short-term volatility here. We've got the end of the month today. Tech's been a little bit weaker. Salesforce took a big hit yesterday. Dell is selling off today, but overall the charts are set up well.
Okay, so even with a 1.7% decline in the NASDAQ, you still feel like the uptrend is in place?
Oh, definitely. The longer term uptrend is in place. It's not uncommon after we get a big recovery move that we've recently had to get some type of a pullback, some type of a technical retracement, but overall, the markets are set up well.
What was your reaction to the inflation data we got this morning? The Fed's preferred gauge, the markets really didn't have much of a reaction, right as expected.
I thought the data was not bad. It came in line. Personal spending was a little bit lower, so I think that was good. Bond yields pulled back, so that's constructive. But what I think you've got right now is I do think we've got some end of the month positioning, but I also think that the tech sector needed a pullback. Salesforce.com was down maybe 18% yesterday. I think Dell's down 16 or 18%. So when you see those big pullbacks like that, there's going to be some weakness in the sectors. But I think overall, the data that came in today was constructive data.
Interesting. So let's talk about the month of May. We are about to close out May trading, and it was a very good month, even with the NASDAQ giving back today, down about 1.7%. That index still up mid to high single digits on the month, boosted by a more than 25% gain in Nvidia. Larry, I'm sure you're looking at this Nvidia chart pretty closely, and what does it indicate to you?
So Nvidia is one of my biggest positions. I've had it for a little bit over a year right now. The longer term chart is set up very well, recent base breakout to new all-time highs. But whenever we see a big breakout move like we've seen, I always expect that we can get maybe a 50% retracement of that breakout move. So the recent breakout was from about 950 to maybe 1150. So I think if there was a pullback somewhere in the 1025 to 1050 range, I think that would be fairly normal. I think it would be constructive. But longer term, I think that Nvidia is going to continue to follow the earnings higher. And earnings have been very, very strong.
What, if any, impact do you expect the 10-to-1 stock split to have?
I don't know. Longer term, it might increase some of the options activity, and I know it makes the stock more accessible to retail investors. I don't know that I've seen any studies that say a stock split is bad, especially when the stock is moving higher. So I think that will support the stock price.
Interesting. Now, in terms of the knock-on effect of the AI trade here, I see copper is another precious metal, or another asset, if you will, that you're following. What do the copper charts indicate as to how the demand for AI might be shaping up?
Copper's very bullish. Recently broke out to new all-time highs, just over 515 or 520. Pulling back here, but what the demand story for copper, it's a longer-term story. So the AI data center build out, which is a very big long-term project right now, it's going to require a lot of copper. Copper is already projected to have supply shortages. And now with this AI data center build out, it's going to create more of a demand for copper. So I think that's a nice longer term secular uptrend.
You mentioned earlier Salesforce and Dell. On one side, we've got this Nvidia, just exponential growth. But what are we learning overall from Salesforce, from Dell, who said their AI servers are essentially no margins?
So two things. I think the market in the technology sector, the market has definitely shifted away from software and tech spending for software and more into semis and servers. Coming into today, I think that the spread between the semiconductor ETF and the software ETF was about 4,200 basis points year to date, which is huge. I think the Salesforce.com situation is a little bit more difficult. They're struggling. I think revenue growth was 11%. I think it's the first time they've missed their revenue estimates since 2006. But with Dell, I think the situation with Dell is different. Dell stock was up maybe 100% year to date. It was up about 40% over the past month. So I think what you've got with Dell, I think Dell's going to turn out to be a viable pullback. I don't know if it's going to be today or if it takes a couple days for the charts to work out, but I think Dell will be higher in 3 to 6 months. As far as Salesforce, it might take a little bit longer for that to get sorted out.
We've seen demand far outstrip supply of some of these weight loss drugs, GLP-1s, if you will, Wegovy, Ozempic, you name it. Are the charts showing you that as well, that the demand simply cannot be filled?
Yes. So the Eli Lilly chart is recently breaking out to new all-time highs. I think Novo is also recently breaking out to new all-time highs. And the last study that I read from, I think it was JP Morgan, they expect the market for GLP-1 drugs to grow by 50% compound from now until 2030. So I think the market is projected to be 100 billion in annual sales by 2030. The Lilly chart, very strong chart. One of my favorite charts here. Novo is also very strong. I've got positions in both, and I think they work much higher.
So I'm curious, Larry, to get your take. What would cause a reversal in the broader uptrend that we see in the market?
Two concerns that I have. Number one is always inflation. So while the inflation data today, it wasn't bad, but it wasn't really good. So core PCE, 12-month, the Fed's target is 2%. In December, we were 2.9. Today, we just got the April numbers, and we're only down to 2.8. So we're really struggling to get inflation down to that target. That's a concern. And then the Fed. So as long as the Fed stays on track that they're not going to raise rates, I think we'll be okay. If for some reason, if inflation starts to move in the other direction, or if the Fed changes gears, then I think that could be a big problem. I don't anticipate that, especially in an election year. It's tough to see the Fed backpedaling. But inflation, it's moderate, but we really have not beat it yet.
Yeah, that'll be the question. Can they get a cut prior to the election in September? Does it have to wait until December? Should markets start baking in the possibility of no cuts this year?
Yes. So I've been prepared for no cuts for about 2 months now. There's a good chance that they won't cut rates. And here's why. The biggest risk to the Fed is if they cut rates and then inflation starts to go back up, not only do they lose their credibility, but now they're really behind the 8 ball. So what I think the Fed does right now is I think they sit and they wait. If inflation does not come down, and as long as jobs hold up, then I think they just stand pat. And that's okay, because the market's shown it does not need rate cuts to make new highs. Maybe the small caps do, but overall the market's made new highs with rates right where they are. So as long as the Fed doesn't change gears higher, I think we're okay.
Larry Tentarelli, Chief Technical Strategist for Blue Chip Daily Trend Report. Larry, we appreciate it. Thank you.
Welcome to Blue Chip Daily, one of the industry's premier sources for high-level daily technical and trend analysis. Blue Chip Daily is ideal for both investors and traders of all time frames who want to be on the right side of major market moves and trends. We focus on over 750 large cap stocks, all major stock indices, over 70 exchange-traded funds, bonds, oil, gold, and Bitcoin. Sign up now for Blue Chip Daily, and you will get access to real-time portfolio alerts, premium Twitter page with intraday alerts and commentary, the chart of the day with best idea, daily video and report, and much more. Claim 30-day trial at www.bluechipdaily.com. Subscribe to the Blue Chip Daily YouTube channel for more technical and trend analysis videos and other content.